Hello everyone, one of the coaches at Unger Academy here, and welcome to this brand new video. So how do you build a trading system? Well, for those of you who are new to this field and maybe have asked themselves this question, today we're going to try and answer it in a straightforward and clear way by going through the steps required to building a trading system. Before we start though, if you'd like to receive a PDF guide where we talk about these 5 steps more in depth, I invite you to please comment below this video with 5 steps. Also, before we begin, as always, I invite you to please support us by leaving a like, subscribing to our channel, and clicking on the notification bell so that you can stay updated on the release of all our new videos and content. We'd like to thank you so much. Okay, so let's get started with a list of the 5 steps to building a trading system. The first step, I marked it as number 0 in brackets, is what instrument? Because before I even start building a trading system, I need to know what I'm writing for. What's the product? Is it a stock? A derivative product? Is it Bitcoin? So once I've defined the asset, the instrument, the 5 steps that I need to follow to build a trading system are: number 1, defining when to buy that instrument. Number 2, what is the purchasing price? Number 3, how much capital is needed to buy the instrument? Numbers 4 and 5, when to sell it and at what price. Of course, if we're dealing with derivatives, we could also reverse buy with sell, but for simplicity's sake, let's just assume that we open a position by buying and close a position by selling. Now, I want to tell you right at the beginning that numbers 1 and 2 and numbers 4 and 5, well, they're pretty much the same at first glance. If I were to answer the question of when I should buy a product, I might answer, well, when it reaches that price. However, this is by no means always the case. Let's take the case where, for example, I'm watching the price of a stock currently trading at $150, and I estimate that it might be worth my while to buy it if the price drops to $130. However, if we're in a situation where the market starts to fall, but catastrophically, and I'm talking, for example, about the crash that occurred in the stock market in March 2020. In such a case, we might decide to wait to buy, even though the price has exceeded 130. So you can see there is always a when to buy it, whether the price is reached or not. And that when could be translated as volatility in the case of this example. Now, I'm willing to buy at that price when volatility is in a range that is more or less acceptable. If there is a severe market crash due to panic selling, I certainly won't try to, as the jargon goes, catch a falling knife. And the same considerations apply, of course, to decide when to sell and at what price. So once we have defined these 5 steps, we need to see them in a concrete example. So let's go back to multi-charts, to the equity curve you saw at the beginning of this video. And let's try to understand how this system is built. I'm going to give you a quick look at the code first, but we don't really care because we had our own composer software help us to write this. But now, where are these 5 steps within the composer? Of course, there's no need to elaborate on point 0 because we've already decided to work on Amazon stocks. We enter the start and end times, the normal times for the US market. We have to decide on the purchase price and the time. In this example, let's say we want to buy Amazon when there is a retracement. Here is the condition: when we have a price cross against the Bollinger Bands. If we want to learn more about what Bollinger Bands are, well, we've made a dedicated video for that, and we'll leave you a link in the description. Okay, so we then need to define the price. In this case, it's at best. This phrase means that when this condition occurs, namely the cross between Bollinger Bands and price, we'll buy at whatever price the market offers us. In fact, this is called a market entry because you enter at the current price. Number 3, how much capital could be defined here. And here we see the number of contracts, but we could also distinguish it as the number of shares. Or we could adjust this by also defining the capital per single trade. Now, after that, we have to focus on the exits. In this case, I have included 2 types. The first one, when to sell it. Number 4, I decided to sell it anyway after 3 sessions. So after 3 trading sessions on the stock exchange, of we'll close our position. At what price? Number 5, at market, in this case as well. I then entered 2 more conditions, one in stop loss and one in take profit, when we reached a loss of $1,000 or a gain of $5,000 respectively. Now these 5 steps are always present in one way or another in all trading systems. It just isn't possible to build a trading system without these 5 steps. So the question we might ask now is, but how do I choose which product to buy? I mean, who can tell me when to buy a product and at what price? Or how do I know what the right capital is for this trading system? And what are the proper exits? Well, at Unger Academy, that's exactly what we do. Now, these are more than valid questions, and the answer comes from a lot of practice and, of course, study of the markets. And if you're interested and want to learn more about these 5 steps, I invite you to please comment below this video with the words 5 steps. And we'll send you a short PDF guide where we explain more in depth the topics that we've discussed in this video. On the other hand, if you don't have the necessary experience to master this subject and think you need help to start investing in the markets with a systematic approach, as we do, then I recommend you go and click on the link in the description of this video. From there, you'll be able to watch a free presentation by Andrea Unger explaining the core or foundation for creating trading systems. You can also get our best-selling book called The Unger Method by covering just the shipping costs. That's it. And finally, if you want, you can also book a free call with a member of our team for some free strategic consultation advice. If you like this video, please leave us a like. And if you haven't already done so, please subscribe to our channel as well and click on the notification bell so that you can stay up to date and be notified when we post a new video with new content. With that, thank you so much for watching, and we will see you soon in our next video. Bye-bye for now.